Turbo Trading with head trader Robert Knight, MBA.
This is a talk on the war in Ukraine with the Russians and what it's going to mean for world economies and vis-a-vis the world stock markets. So we know that this is the SPY, and we know that it's been under a lot of pressure. Started with inflation and the tightening by the Feds to raise interest rates and withdraw liquidity. And then you throw in Russia, and you get this so far five, 1, 2, 3, 4, perhaps it's the fifth wave, move down, and we should see this trade into 405, maybe 4,000. Now that'll be, into bear territory. So markets are going to go into a bear market. There's no doubt about it, and it's precipitated. I don't know. It's going to be increased by the fact that you have this war in the Ukraine, but it started much before that. So let's try and get a clear picture on where we came from and why we did and where we're going. So we had the pandemic hit us, and everything gets locked down. People, businesses close, especially the service industry. Everything gets hit very hard. But then the government starts throwing money at it, and rightly so. In 1929, when they didn't do that, you had a 5-year depression, and then was brought out of the depression by the Second World War. So the governments, whether you like it or not or believe it or not, they had to do something. They couldn't just let the economy stall. So they print a bunch of money, $7 trillion. And it goes into the hands, some of it goes into the hands of the American people. A lot of it just goes into the bank, though. So that's called the velocity of money. And the movement of the money, the velocity of the movement of money through the system. And initially it doesn't go anywhere, it's just sitting there. And so, but the economy, a lot of the economy isn't affected. High-paying jobs, professionals. The service industry gets hit the worst, but a lot of jobs, people just are now working from home. They're not working from at the office, but they all still are gainfully employed. But people are very nervous, so they're not spending their money. It's in the banks, and the government prints all this money, and it's in the banks, because people are uncertain of where it's going to go. But as we get near the end of this cycle, the pandemic, we find that now there's $7 trillion in circulation from the government, and whatever the number is doesn't matter. It's mind-boggling. And plus, people that had saved all this money, they see that the pandemic is coming to an end, and they start to spend their money now. So you have a lot of money chasing fewer goods, because the downside to the pandemic was the fact that a lot of production was curtailed. Couldn't get chips. In China, they shut down complete cities. Nobody could go to work. So you have this huge supply chain issue. And so you have a limited amount of goods, but you have this massive amount of cash. So that sparks inflation. Too much money chasing too few goods. And so we get inflation. So the Feds step in and say, okay, that's it. We're withdrawing our liquidity. You don't need it anymore. The economy is very strong. And and by the way, we're going to raise interest rates. Not a lot, just maybe 1% over the year. So they're trying to put the brakes on inflation and trying to take some of the liquidity out of the market. So then we fast forward to 10 days ago or 11 days ago, whatever it is, and Russia invades the Ukraine. And the result of that, there's a lot of results of that, but one of the results of that is that every other major country, they to punish Russia for not acting in the best interest of the world economies and, being a superpower, not acting like a superpower. They bring all these sanctions against Russia, take them, shut down their big banks so they can't trade. They block all, try to block their trade. They can't fly. All these things that they're trying to do to crush the Russian economy so that the war machine can't continue to go. But Russia's a big supplier, as is the Ukraine as well. Russia and Ukraine supplies 25% of the wheat to the world. They're 5% of the nickel, or they're the third largest oil producer. They supply Europe with the gas. They're 10% of the world's supply of aluminum. They supply coal. All these things now aren't able to hit the markets. Now there is the ability of other countries to take up the slack, but that takes time to take up the slack. That's on the one side, but some of it doesn't. You can't take up the slack. But even if they can take up the slack, what happens is people that need to supply product scramble to buy as much as they can, to put it in their warehouses or wherever they can, because because if Russia is a disruption from Russia to supply goods, then to meet their ongoing obligations, they need to buy the commodity that they need to build to build things. So coal for making steel, or steel mills, they need to buy coal, so they rush out and buy coal. Oil and gas, tankers need to go back and forth. They need a secure supply of bunker fuel. Aluminum, there's projects ongoing for aluminum. They need to buy as much aluminum ingots as they can get their hands on, because they have obligations that they need to fill, and all of a sudden you're taking this huge supply out of the market. So that drives all the commodity prices up. We saw that with oil, trading at 120, 130. Copper, I think, hit 6 or something like that. Gold back up to 2,000. I'm not sure what coal traded at a metric ton, but it, spikes as well. So all these commodities all of a sudden now are spiking. So that does a couple of things. Obviously, that drives everybody's costs up. Very inflationary. There's still money out there to buy this stuff, because there's all this money in circulation. But now it's the cost of everything is going to go up. For instance, to bring a ship, a freighter that carries all these containers, they were paying, just prior to the war, they were paying $600 a metric ton for fuel. In Singapore this morning, it was posted at $1,000 a ton. So their prices have gone up close to 50%. Yeah, more than 50%, from 600 to 1,000. So it's gone up more than 60% or 50%. That's a huge cost. So now fuel alone is 45% of their operating cost to bring goods from China or the Southeast Asia to North America. And that's just looking at one scenario, not looking at coming from Europe or anywhere else. So their costs go up 45%. Well, that gets passed on through. I mean, the shipper, the person that's shipping the commodity or the product, they have to pay for that, and so they raise their prices to their wholesaler, or on the other end of the shipping line. Of course, then all that gets passed on to consumers. So prices go way up for consumers, which is going to be very inflationary. But it's more than that. So now, because prices go up, people start to substitute or stop buying. And and buying is what fuels the economy. So if nobody's going to buy, then the economy is going to go into a recession or into a downturn. So the upset of, or the fallout from the Russian-Ukrainian war is going to be a couple of things. One, people are very nervous because lots of people are fearing nuclear war. People are fearing they're going to lose their jobs because prices are going up, and they're fearing inflation. Everybody all of a sudden is pulling back, and they're not spending their cash because they can't afford to, or B, they're worried about where this whole Russia-Ukraine thing is going to take us. So what happens now then is you can see, and you see it here in the SPY. We get the Feds tapering, talking about raising interest rates. Now they're not talking about interest rates raising because of the conflict. But look at this, the SPY in this downtrending channel. If this trades down to 4,000, then it means we're in a bear market. And it could take some time for that to work its way out because we don't know when the war will end in between Russia and Ukraine. They're talking, if it stopped soon, in the next week or two, we might be able to salvage something. But there's already huge damage done everywhere to the world economies. And the freight train may already been stopped, and it takes a lot of energy to get it going again. Or it might be slowing down, and it takes a lot of energy to get it going again. So I would expect that from here in, we see markets continue to sell off in the bear market territory. And especially if the war continues. If it escalates, it doesn't matter what investments you have. It'll be the end. But let's not think that that's fortunate. Or hopefully there's sounder minds on either end of the trigger finger in that scenario, and that never happens. But it's a fear that people have, and the wars is a big drain on assets, and stops a lot of growth in the world. And as such, we're going to see a world slowdown, and the markets here continue to sell off. I think we hit a bear market. I think this trades down to 400 to start with. If anybody has any questions on that, feel free to ask me, and I'll try to answer them.
Don't forget to like and subscribe to our channel. Reach new levels of trading proficiency. Become a member at turbotrading.biz.